Okay, guys, now let's look at intraday selling strategy. Okay, so I've discussed about 2-day breakout breakdown option selling and 3-day breakout breakdown option selling also, and then opening range breakout strategy we discussed in 5 minute and 15 minute. So I hope that is very clear to all of you. In that, ORB strategy is used for buying as well as selling. But 2-day breakout breakdown, the method I discussed that you need to use for option selling. But you will definitely using that for buying also. Let's say 2-day candle has been broken. You will be buying also once this level is broken out or this level is broken out. That strategy or the strike price that you need to use is something which we discussed before. You always use at the money. But selling, I told you the strike price use. The only difference is the strike price and the expiry you select. If it is a 2-day, then next week expiry. If it is 3-day, then monthly expiry. Okay, if it is towards the end of the month, then go for next month. Okay, now let's look at intraday selling. So here what you will do is, guys, I don't want to discuss the famous 920 strategy. This is something which if you want to know you 920 strategy, just Google it and you will get it. There is nothing at 920. So intraday selling means I will be focusing initially directional and then non-directional. Okay, non-directional is always better because we are no one to predict the direction. So 920, there is a famous strategy that is straddle strategy, but basically at 920 itself you're taking a non-directional view. But I won't do that. I will go non-directional only if my directional view is broken. So let's see how I proceed. This 920 straddle strategy you can look at later, and then you can see anywhere it is clearly there, and this YouTube channels you can see a lot. Okay, it is nothing but you will be selling a CE and PE at the money at 920. Okay, and then you will keep a stop loss for 30 points on each legs. That's what normally you do. But let's don't discuss about this. Let me focus on the one which I plan here. Initially directional, then you will shift to non-directional. Okay, so here I will be using only the Camarilla R3 and S3 setup or the CPI setup. These are the setup that I use, but mainly Camarilla R3 and S3. So guys, let's say this is your R3 and this is your S3. So we discussed already that what will you do when the price comes here? You will expect a rejection trade. But you need to along with this, you need to use the L-Rimble system, so that if this is a green candle which you are getting here like this, then you will wait. You won't take an entry. You will wait for a red candle to break the low. Only when you will take an entry on the put side. So what you will do? You will buy PE. But I am discussing intraday selling. So what you will do here is, when the price come here, you will be selling a call by expecting a rejection. So this is what you are expecting with strike price ATM, and this is intraday strategy. The previous one that we discussed, you may hold the trade also, 2-day breakout, 2-day breakdown, and how to hedge that. If you require 2 heads, I will discuss that later, that as well. So selling call, here you will be doing at the money. Which option? Weekly options. Okay, because this is purely for intraday. You're not going to hold this overnight. Okay, the previous strategy that I discussed is you will be holding overnight and you will be hedging also. Hedging I'll discuss as a separate strategy. 15 minutes towards the end I'll discuss how to do hedging for that. Okay, so here, but normally when you have taken that, you're selling far out of the money. So normally you will go without hedge on the put side, only maximum. If at all you hedge, you will do that. Overnight only you will do that. When you take the position, morning you won't do, overnight you will do. But here you will be selling a call. Perfect? And if it is coming down, just like you are buying a put, if the market is coming down, you will get advantage of the delta. Delta move you will get. That means if you are buying at the money or if you are selling at the money, when Bank Nifty move 100 points, you will be getting close to 40 to 50 point moves. But in case of selling, you will get delta move. At the same time, if the move was slower, you will get a time also. So I cannot say buying a put and selling a call is equal. In terms of delta move, there may be equality, but when you see this selling a call, you will get the time advantage also there. So even if Bank Nifty is spending time here, this selling call option will give you money, but buying put option even can end you in loss because of the time decay. Because Bank Nifty is not going on the downside, just spending time here, the time decay can happen, and even if it is staying here, it can show some MTM loss also. But selling a call option will give you money if it is staying here, if it is coming down. Okay, so this is my directional view. Now, first I have taken directional, then what will happen? What can happen if it is coming down? It is well and good, but it broke. It broke like, oh, okay, I'll take a separate page and I'll explain. So what I said, this is my R3 and this is my S3. When the price came here, I sold a call. Okay, sell a call because I'm expecting a move on the downside. Because this is R3. And against my expectation, what have happened is, let's say the price broke out, went like this. Okay, now when the price went like this, what you will do, see, either you will be selling a call. We have discussed about PE buy also before. So what the PE buyers will do, they have no other option but to exit, because this is going to be a stop loss and you will be exiting the position. Now you sold the call. You also have the same option, keeping the same stop loss. You can exit CE. This is one of opportunity which is available, or one option available, or till then you are directional on the downside by selling CE. Now you will change yourself to non-directional. What you will do is you will sell a PE also. Okay, so already you sold a call here. Now once the price come here, what will you do? You will be selling a PE. What the strike price? Strike price will be at the money again. So this is also at the money, this is also at the money. And now you are already in a straddle, right? Because you already sold a call. Now you sold a put. Now you converted your directional position into non-directional. Initially, you were with a call sell only. Now you have sold the put also. Now you sold the call and put of the same strike price, which is at the money. What is the definition of a straddle? Straddle is nothing but sell a call and a put of a same strike price. It is not necessary at the money. Okay? It is not necessary at the money. Straddle's technical definition is a sell a call and put at same strike. So here we have sold at the money. Normally people consider straddle as the at the money. It could be any strike price. But here what we did, we sold a call, we sold a put at the money. So initially we were directional on the downside, but once it is broken out, we are turning non-directional. Now what are the possibilities? If the market is going up, let's say 100 point going up. So what will happen is, this call will give you 50 point minus, but this put will give you 50 point plus. So this is getting balanced. The call will move 50 point minus, but the put will give you 50 point positive. So in that way, this is getting balanced. And if they spend some time here, the call may not move 50 point. Instead, it may move 30 point only. But the put decay will be very fast as it is staying above this, and put can give you some 40 or 50 points. In this way, you will be making a profit also in this trade. Even the price is staying above this, but if the market is going sideways from here, or even if the market is coming down from there, then what will happen? The call will give you profit. Call sell will give you profit, but the put sell will give you loss. That also if it is coming sharp. If it is spending time here, if it is spending time here, if it is spending time here, no issue. Now, actually, your range you expanded. 100 point upside and 100 point downside, you have nothing to do. Okay, so this is how normally you convert a normal directional position to a non-directional position. Now here, what can happen is the problem will come only if Bank Nifty move either side more than 100 point. So 100 point move, I'm okay, 50 point here, 50 point here. But if there is 100 point move or above, if it is happening, then what you need to do is, you just need to select what is ATM at that point of time and again exit this position, exit these two position and sell the new call and the new put. Okay, I'll show you here. Let's say this is at 42,800 and this is 42,500. So when the price came here, what you did? You are looking for a rejection. Okay, so what you did? You solved a CE 42,800 CE you solved. Right? You're selling CE. But what happened? There is a breakout. Now, once the breakout happened, this position is going against you now. Okay. Now, see guys, there can be this breakout again can come. It can come down. It can consolidate here. It can consolidate here also. Or it can keep coming down also. We don't know what is the possibility. Okay. So here, if you are buying a put, if you are a buyer, you buy a put and then you will exit immediately. But since you sold the call, you have options to hold that for a time decay, provided you will be converting this into a straddle by selling a PE which is against the same strike price 42,800. Now this is what you did. Okay, so you collected some premium. Let's say we will assume that let's say 150 is collected and 150 is collected. Okay. Now what you need to do is, if the strike price, if this is going 100 point, it is okay. If this will give you 50 point, one will give you 50 point and this will give you loss. Call will give you loss and put will give you 50 point. So this premium will become 100 and this premium will become 200, effectively 300. But provide if there is a time decay, you will be able to capture that also. Now, if it is going more than 100, that means if it is going 40 to 900, the next adjustment that you need to do is at 43,000 level. Okay, so next adjustment that you need to do is at 43,000 level. Why 43,000 level is because if you see it keep going up again another 100 points, then what will happen is call, you will lose, you will gain another 60 point and this put you will lose another 40 points only. Overall loss will be 1/10, but here gain will be 90. Okay, so you may make an overall loss of 20 in terms of delta, but the time will be there for moving this 200 points. So in that you will be able to manage this, but beyond 43,000 you cannot hold this position, because in the next move this can be 70 and this can be 30 only. This is not matching. So what you need to do is cut both the position, enter new straddle. That is one thing that you can do, okay, to be on a safer side. Or after moving 200 points, you exit the position, put position completely and try to add more call position, because there can be a retracement. If you are getting any rejection levels, if you are not finding any rejection level, what is the safe method is just add another ATM. What is another ATM? 43,000. Okay. You sell the call and you sell the put. And try for some time decay. It may come down. See, 100 point down. It's okay. This call will lose 50 points. This put will gain 50 points. So that will be matching. So the way they are going up, every 200 points you need to adjust. Every 200 points you need to do the adjustment. That's all what you need to do here. Same way, the price is coming here like S3. This is R3. The price is coming here. What you assume? You will assume that it will take a support. So as a buyer, what you will do? CE, buy. But if I need to sell, what I will do? I will sell a PE. So I sold a PE here, expecting an up move. So my initial expectation was an up move, so I was directional. But what happened is the price broke down. I'll have to cut this position immediately. But this I will hold, and this directional, what I'll do? I'll make to non-directional. How I will do that? Along with the PE sell, I will sell CE also. Which strike price? This is also ATM. This is also ATM. So the directional I converted to non-directional. Now I am sitting with both CE and PE at the same strike price. That means I am not on a straddle. Okay, so this is how I will be entering a straddle. I won't be entering a straddle at 920. If I am entering at 920, the disadvantage for me is it can go either way. But since we have some technical knowledge, first we will take one entry on the call side. On the put side we have taken here. If it is giving a move, it is a very good for us. It is very good for us. It could be 920, no issue. Even then we are taking one direction. If our view is going very good, that means we know the probability of this. If our view is working, we are getting good move and we are capturing the time also. No need to enter unnecessarily the other leg. But if our view is going wrong, we can come to know, right? One candle is coming and closing the here. Then we will convert into a straddle. So we will get into a straddle not at 920, but when our view is broken. Till the time, if you want to be a seller, this is what you need to do. This is what you can do in intraday. It is much better than 920 strategy. I tried everything and now I am using only this during my intraday selling. And I use only this Camarilla pivots and CPR. Nothing else I do. The same I'll do at CPR also. Nothing else. No VWAP, nothing else I will do. I'll focus only on R3 and S3. If it is in the range, I will look for this range. Where to book the target, that is up to you. You can, so if I've taken here, now either I can wait for the price to come here. No issue for me to wait. The more I wait, the more decay, the time decay I get because I am in a selling position. If I am buying, I have to book profit accordingly. But if I am selling, I'm okay. I can wait comes till it comes to R3. Till the time it is not breaking this. I am okay to this. I am okay to hold this. Even if it is consolidating here, I am making profit. If it is going here, I am making profit. If it is going here, I am making profit. If it is staying here, still I am in profit. Only when this break, I will convert into straddle. So where you will book the profit and how you will book the profit? Once it comes here, what the position you have is you sold a P, right? That you will exit. Once it comes here, you will exit the P. Then what? You will do a normal setup. From here, you are expecting a rejection. So, exit the P. Try to hold the P. Now, when you are expecting a rejection, right? What you can do? You can sell C. And same. You can hold here. It can hold here. It can come here. Look for a target like this only. So, what I said is, you will be trading in this range. What if it is broken out? If it is broken out, you will convert into straddle. So, exited the pre-PE and you entered the CE cell. Now, again if it is giving a breakout from here, then you enter the PE again, but not the previous strike price which you entered here. You have to enter the ATM strike price. This is very important. I'll repeat once again. I have absolutely no problem in explaining time here. What I'm saying here is when the price is coming down here, what normally you will do? CE buy as an option buyer. But since I'm talking about selling strategy, what I will do? I will sell. What you will sell? From here you are expecting a support, right? So CE buy or sell PE. Now let the market be here, let the market be here, let the market move up. In all situations, you will make profit. You will make loss only if market breakdown. So in that case, you will exit this position as a buyer. If you are a buyer, but let's not discuss about that now. You are a seller. Then what you will do? you will sell a call and you will convert this together into a straddle. But if this candle is not there, then let it move here, let it move here, where you will book the profit. You will book the profit. Wait for this. Once it comes here, you already sold the PE, exit that position. What you will do? You are looking for a reversal from there. So there you will be selling call. Okay? You are expecting a rejection. You will be selling a call, and then by chance if it is broken out, you already exited this PE. You only have this position. What you will do? You sell another PE and make it into a straddle. So where you will get a straddle? You will get a straddle if your level is broken. If the price is in your level, you will go directional. Maximum you will try to go directional. But if your level is broken, you convert this into a straddle. You convert this into a straddle, which add the money. Okay, so I hope this is very clear to all of you. This is a very important strategy, guys. More than 920, that is, this will work out for you. There is nothing much to do. Now, the question is, if it is going, once you enter into a straddle and if it keeps going down or keeps going up, what you need to do? Every 200 points, you create a new straddle. Exit the existing straddle, create the new straddle. If 200 point down, new straddle. Exit the existing straddle. Rather than again changing to directional or non-directional. Because directional strategy we take only at what level? If it is at S3, you will try. If it is at R3, you will try. Or CPR, you will try. Otherwise, I am not going to do. I will be looking for non-directional only. So, if the price is here, I will look for upside. If the price is here, I look for downside. Any other case, I will look for non-directional. That's it. This is the simple rule that you need to keep as a seller. Some of you have still confusion. You can watch the video. I'll explain it once more. R3, S3, R3, what you need to do? I'm only talking about seller perspective. No buying, nothing. At R3, what you need to do? Expecting a rejection. So, you will sell CE with strike price ATM. Okay. At S3, what you will do? You will sell PE with strike price ATM because you're looking for an up move. So, this is the only two directional selling trade you will do intraday. Only two directional selling you do intraday at R3 and S3 level, and also the same happening at CPR level. No other directional entries in selling. This is the only two directional entry. Otherwise, non-directional is always safe for us. Now, after getting this entry, only if this entry is going wrong, means let's say this trade. It is going wrong if it is broken down. So, now this trade is going wrong against you. Then nothing to do. The directional you will convert to non-directional by selling a call also. So, you sold a call. Now you're non-directional. Now you're sitting with a straddle. Which straddle? ATM straddle you're sitting with. So how you're entering into a straddle is what I've discussed now. It is not at the same time you're entering both the legs. First you have a directional view. You will enter. Once a view is broken, convert this into a straddle. And after that, if there is a 200 point move on the downside, what you need to do? Exit the straddle and shift to the new straddle, which is also ATM. Similarly, if there is a breakout here, you already sold a CE, you will sell a PE and convert this into a straddle and just sit. Nothing to do for another 200 points on upside as well as on the downside. Either it could be downside or it could be on the downside. Wait for 200 points. If there is no 200 point move upside or downside, if it is going like this, you're so happy, just wait. Only if 200 point move on the upside, again, what you need to do? New straddle you create, exit the straddle, new straddle you create, which is again at the money. If there is 200 point move, then exit the straddle, create a new one. So 200 point move on the upside, 200 point on the downside. So overall range you're getting is 400 now after entering the straddle. If you don't want to take that risk, you can adjust even after 150 point move also. Then your range will be 300. Okay. So that's about the intraday selling strategy. We will look for gamma blast. Just give me 2 minutes break. So then we will look gamma blast.